Hi, welcome to the August State of the Market. Flying solo this month for this. So what's happened? Well, the Reserve Bank lowered interest rates, which is fantastic. Anyone with a mortgage on a variable rate gets the benefit of that, paying less interest to the bank or lender, which is great. What else has been happening? So branches, I'm not sure if anyone's noticed in the last few years, like 20, 30%, not even as high as 40% of branches have closed. So less and less people are needing branches to do their banking, and there are more and more lenders that don't have any branches at all. That's certainly been a change. Annual fees. More lenders are not charging a high annual fee. So when I say a high annual fee, so to have a loan, some lenders charge $395 a year, which generally includes at least one offset, usually more than one offset account. May include access to a credit card, but it's just getting more and more competitive. So there are more and more lenders, as I say, charging less. So whether it's $10 a month, $8 a month, $15 a month, sometimes that includes multiple offsets, not always. So there are other ways that, to look at, the overall cost of having a loan. First home guarantee, very recent news, a bit unusual in our experience with governments. Things usually get pushed back, but it would appear for the first home buyer scheme that helps a lot of our clients buy their first property, and with a deposit not much more than 5% and no mortgage insurance, as the government basically guarantees it. This is the federal government, and then the federal government is then not an owner of the property. So that particular scheme, there have been some changes, and it looks like from the 1st of October, so very soon from now, the income requirements, it looks like they're about to be dropped. So the income requirements at the moment have been $125,000 for a single or $200,000 for a couple, as in on the most recent notice of assessment. If there's more income than that, then, someone is not eligible for or to go onto the scheme. But it looks like that income requirement's about to disappear, which certainly makes it powerful, which means more people will be eligible. And the maximum purchase price is about to increase as well. Depends on where in the country, but that makes it easier to take advantage of it as well, because some people don't go onto the scheme because they like to purchase for more than what the scheme allows. So that certainly helps. Will it increase purchase prices? That's a really good question. Generally speaking, from an economic point of view, if you're allowing more people to be eligible, then maybe it will increase purchase prices. So sometimes there's a plus and a minus, but certainly it helps more people get onto the scheme. So that bit is certainly very good. Probably second last point. So just coming back to the interest rates dropping recently. So what's the chance of there being another rate drop at the next RBA meeting in September? At this stage, I was just having a look earlier on the website that we checked. I think it's around 30% chance of another rate cut next month. So probably not, but who knows? We will see. The last thing I want to touch on is we do help a lot of self-employed clients, and we often get asked what's required. Pretty much all the lenders are happy to see the last 2 years of tax returns, financial statements. So the last 2 years, individual and company. Sometimes there's trust involved, but the last 2 years. But more and more lenders are okay with just the last 1 year, as long as the ABN's been around for a couple of years in most instances. But then aside from that, sometimes there's an opportunity for the last 2 years of the notice of assessment for our self-employed clients. And then there are some clients, or some banks, I should say, that are okay with looking at if there's a regular wage being paid, whether it's fortnightly, monthly, weekly, if it's the same amount for a period of time, whether it's 6 or 12 months, then sometimes that can work as well. So it used to be a bit more consistent around 2 years of returns, but lenders are getting a bit more flexible in that space. So for self-employed clients, there's often more than one way to look at the borrowing capacity and whether, someone is eligible. So state of the market. I'd say a bit more demand, it's fair to say, with interest rates dropping. It's allowing high borrowing capacities. So if anyone wasn't eligible for a loan 6 months ago, there might be a chance to be eligible now. Or it might be someone may not have been eligible for just the amount they needed 6 months ago, even for a refinance, debt consolidation. Well, lending size generally has increased because interest rates have come down. So that means that it's a little bit easier to get the loan amount that people need. So that's it for August. Hope your team goes well in September in terms of footy finals if you're following that. And otherwise, talk to you in a month. See ya.